Have you ever wondered how the world's biggest food companies try to predict the future? Well, today we're going to unpack exactly that. We're looking at how they measure the hidden climate and water risks that are literally baked into the ingredients they source from all over the world. All right, let's get into it.
Just think about the coffee you had this morning, or maybe a snack you're going to have later. The very existence of those products depends on this long, really complex journey from a farm somewhere all the way into your hands. But what happens when that journey is threatened by something you can't even see?
So here's our roadmap. First up, we'll talk about why sourcing is so incredibly important. Then we'll look at how companies figure out which crops pose the biggest risks. We'll get into a key metric called water stress. After that, we're going to walk through the actual calculation they use. And finally, we'll break down what these numbers really mean for a business and for investors.
Okay, let's start at the very beginning, the foundation. For any company that makes products from agriculture, everything, and I mean absolutely everything, starts with having a stable, reliable supply of ingredients.
And here's the fundamental problem, right? Businesses need things to be predictable. But climate change, it's introducing massive unpredictability into the system. You've got shifting weather patterns, you have water shortages. It all means the crop yields can just swing wildly. And when they do, so do the prices and the availability of the raw materials these companies absolutely depend on.
And make no mistake, this isn't just some environmental issue on the side. It is a critical financial one. If you fail to manage these risks, you could be looking at higher costs, smaller profit margins, and slower growth. We're talking about things that have a real, tangible impact on the bottom line. So the big question becomes, how do you even start to get a handle on this? Well, you can't manage everything at once, right? So you have to focus on what matters most. And that brings us to the very first key step in this whole process, figuring out your principal crops.
Now, this isn't just some vague idea. It's a very specific dollars and cents definition. A principal crop is any ingredient that makes up a pretty significant chunk. We're talking 10% or more of a company's total revenue. This one simple rule forces a company to zero in on its most vital, most important ingredients.
So, for example, a company might look at its books and see, whoa, maize or corn is responsible for 40% of our revenue, and soy, that's another 25%. Just like that, they know. These are their principal crops. These are the two ingredients where they have to focus all their risk analysis.
And once they've identified those key crops, they have to start assessing some very specific threats. Are the regions where they grow all that maize suddenly facing water shortages? Could new types of pests start attacking their soy fields because of warmer weather? These are the really tough questions they have to answer. And a huge factor in all of this is one single critical resource.
Okay, so we've talked about specific crops. Now let's shift our focus to the one thing that underpins all of them, water. And this is where having a standardized metric becomes incredibly powerful. This metric is called baseline water stress, and it's a really smart way to quantify a complex idea. It basically measures how much water is being pulled out of a region compared to how much is naturally available. If a region scores over 40%, that's considered high stress, a real sign of significant competition for water. And over 80%? That's extremely high. That is a huge red flag for any supply chain. Okay, so it's one thing to know that a region has high water stress. That's good information. But how does a company translate that geographical risk into a concrete financial number? How do they actually put a dollar value on their vulnerability?
This is the part where it all comes together. We're going to walk through the exact calculation that turns all this data, sourcing locations, financials, into one single, powerful percentage.
The formula itself is actually pretty straightforward. You take the total amount of money a company spends on ingredients that come from those high or extremely high water stress regions, then you just divide that by the company's total spending on all its raw materials.
Let's make this real with some nice round numbers. So imagine a company spends a total of $40 million a year on its ingredients. After doing all the mapping of its suppliers, it discovers that $10 million of that is sourced from regions that are flagged as having high water stress.
So we just plug those numbers right into our formula. First, we divide the 10 million from high-stress areas by the 40 million total cost. That gives us 0.25. Then, to get a percentage, we just multiply by 100. Easy enough.
And there it is, 25%. That one number represents the portion of the company's entire ingredient supply chain that is financially exposed to the risk of water scarcity.
So, we have our number, 25%. But what does that actually tell an investor?
or a manager, or even you as a consumer? What's the real story behind that statistic?
Well, that simple percentage is so much more than just a data point. It's really a snapshot of a company's vulnerability. It's an indicator of how prepared or maybe unprepared a business is for the environmental challenges that are not just coming but are already here and getting more intense.
You know, for an investor, a high percentage is a major warning sign. It signals that the supply chain is fragile. It might mean the company really needs to start looking for suppliers in different, more water-secure parts of the world, or it could push them to invest in helping their current farmers become way more water efficient. At the end of the day, this number is a direct signal about the potential for future disruptions to profits and growth.
So the next time you're at the grocery store and you pick something up, think about this whole process. Think about the incredible journey of those ingredients and all the invisible risks that companies are just now learning how to measure. It really makes you wonder, doesn't it? What kind of story would the numbers tell for the things sitting in your own pantry right now?